You are listening to chartingwealth.com for Wednesday, the 23rd of May, 2018. Everything is down for the day. We are really in the summer doldrums. Up one day, down the other, sideways slides on a lot of things. Again, want to learn more about how this market really works, how things work in the world of charting. Please make sure to order our book. It is now available. In fact, we are in our second reprint already. We appreciate all of you purchasing the book and doing that because it really helps us. It's really the first thing other than our trader journals to actually allow us to monetize the site with all the investment we have put into it for you for the last several years, producing these reviews every single day. It's nice to have this book out and have it so well received. You can get your copy. Just go to chartingwealth.com, the website. Under the daily review, there is a link there where you can order your book, and you can also get your trader worksheets. And we also have a link to how to use those trade worksheets. It actually ends up, you put them all together, the trade worksheets, the daily market worksheets, the weekly market worksheets, put all of that together under your trader's journal, and it becomes your real trading almanac in helping you understand what's going on in the market during each special time of year. We're currently in the summertime trading zone, which is the worst trading zone because a lot of the volume's out of the market. A lot of the big money leaves. People go on vacation in the summertime and take it easy when it starts getting hot. That just goes back to what it was like in New York City in the summertime. All the wealthy people went out to their estates and left during the summer to get away from the heat. Well, a lot of that seems to still happen, and we have a lot of the volume go out of the market, and that's where we see these slides. As we look at the S&P 500, we can just see how it's been sliding sideways just looking at the two-day chart. Now we go to our weekly chart, which is where we always start. And of course, we can even, in fact, see it there all the way from the 6th of April on. Things just sort of going sideways. Prior to that, things had gone sideways before the drop, starting on the week ending the 23rd of March. And again, we'll have some movements and then sort of a sideways slide for a while, maybe a little uptick. We're in an uptick right now. Don't have a crossover yet on the weekly. Don't have a weekly vertical crossover. Looks like we're getting closer and closer to it, but a pullback this Tuesday of 0.30% in the S&P 500 makes it less likely that'll happen. It still can happen. Derivative oscillators are already gone positive. Price percent oscillator is trying to get there, but hasn't done it yet. We have a green up candle so for the week, but when you look at the movement, it's right within the same zone of price that it was the prior week so far. Again, we're only 2 days into this 5-day candle. We look at the 2-day candle. It crossed over going up back on the 16th of April, and then a big sideways slide for the next many, many days. It did start ticking up on the 2-day candle ending on the 8th of March, and then again up on the 10th and the 14th, and then really sliding sideways since then. Again, price is still about where it was, where it bounced up to back on the 14th of this month. So we do see the derivative oscillators gaining a little bit of energy, price percent oscillator heading up. As we look at the 4-hour chart, what do we see? Well, it's actually bounced off in the afternoon. The red signal line still in a confirmed down move on the 4-hour chart, a red spinning top, which means indecision at the end of the day, tending down. So again, we'll just continue to watch things, keep our eye on it. Price movement still above the 2-day trend line, so we'll just keep our eye on things, keep watching what's going on. Don't have a trade at this point. May have one if we have a weekly vertical crossover by the end of the week, but just keep in mind the weekly's going down, 2 days going up. When that happens, it doesn't meet our rules for jumping into our standard type of trading. On to the Qs. That's the NASDAQ 100. It's a red open box candle for the week, again, which means significant slowing in price movement on our Heikin Ashi candlesticks. Heikin Ashi, of course, means average pace. And we see that the derivative oscillators in the positive, price percent oscillator still hasn't crossed. Could do that by the end of the week, but it hasn't happened yet 2 days into the 5-day candle. We look at the 2-day chart, had a crossover back on the 4th of May, and then up for 3 more 2-day candles, and then really sliding sideways since then. Of course, the candle that ended on Friday, the 18th, was a red doji. We now have a green spinning top, which means indecision tending up. Price percent oscillators kicked up a little bit. Derivative oscillator continuing to lose momentum. And then as we look at the 4-hour chart, it's still in a confirmed down move. However, the derivative oscillators losing that downward momentum. The price percent oscillators still heading down. Ended the day with a red spinning top. Again, means indecision. Not as much indecision as a doji, which looks like a cross. That's the most indecision we see, but some indecision tending down. And again, that would comport with what we see on the 4-hour chart. So likewise, on the NASDAQ 100, since we have the weekly chart still in a confirmed down move, trying to cross over going up, and the 2-day in and up move, we don't have a trade. We're waiting to see which is going to win out. Will the weekly pull the 2-day over and send it down, or will the 2-day keep its power up and pull the weekly over? One way or the other, we have to have both the weekly and the 2-day moving in the same direction, and that's not happening. We'll keep you posted as to when and if it does. Now to TLT. What do we see going on there? Well, remember, we had a weekly vertical crossover at the end of last week, Friday, the 18th of May. And so far, we have the Heikin-Ashi candlestick continuing to move down. We see the derivative oscillator gaining downward momentum, the price percent oscillator heading down. As we look at the 2-day chart, for the record, we do see that TLT was down 0.15% for the day on Tuesday. We see that the 2-day chart is actually a green closed candle. That tends to signify much stronger movement in a reverse order than we would get with simply a red open box candle. So what we see happening is, again, some bit of a pullback. That's based upon Monday's up movement. But of course, Tuesday was down 0.13%. We see that the derivative oscillator is gaining downward momentum. The price percent oscillator not going down to the same angle it had been, but still going down. Price movement, however, has pierced through and closed above the 2-day trend line. Now, as we look closer into this 4-hour chart, what is it we are looking for here? Well, we're looking for a jumping in point into a down move. We did not have one as the markets got into after their first hour on Monday, because things went up all the way through Monday afternoon. Tuesday had a doji in the morning and a bit of a spinning top, red spinning top tending down in the afternoon. Price movement on the 4-hour chart just below the 2-day trend line. However, we see the derivative oscillator heading up and the price percent oscillator heading up. So what we're waiting to see, if indeed it does occur, is a crossover going down on this 4-hour chart. That would be our jumping in point so that we could ride the weekly vertical crossover going down. Because why? Well, we have the weekly chart in a confirmed down move and the 2-day. And the 4 hours in a backup right now, so as soon as it rotates over and starts heading down, we would have the potential of jumping into a down trade. Okay, let's go back to the weekly, and we're going to take a look at our last chart, and that is gold. Now remember, gold crossed over going down all the way back on the 16th of March, then went up subsequently for about 5 weeks, not strongly up, but ticked up over that 5-week period, and then started rotating over going down strong on the week ending the 27th of April, and has continued down since then. A little bit of an up week for the week ending the 11th of May, but that sandwiched between the 2 down weeks before and after, and so far this week is a much stronger down week than than the others. Now again, it's only 2 days in. If there's a lot of up movement, that could change that, but so the weekly chart is in a confirmed down move. We take a look at the 2-day chart. It's in a confirmed down move also. And of course, we have been looking for, and let's just talk about where the indicators are on that. Continuing to gain energy on the 2-day candle, 2-day going down. We see the derivative oscillator heading down, still just a little bit more down over the course of this latest 2-day candle than the prior. Not strong, but the 2-hour price percent oscillator continues to move down too. Now let's take a look at the 4-hour chart. What do we see going on there? Well, it actually up in the morning, and it was enough up movement in the morning that even with the down movement in the afternoon on our average pace, we saw a crossover on the derivative oscillator and on the price percent oscillator. Now, that is not what we want to see. We want to see things rotate back over going down, so be very careful if you are in that down trade that we had a jumping in point in the afternoon on Tuesday after we had, on Monday we had that jumping in point after we had the crossover. And I'm sorry, I am correct. We had the crossover in the afternoon after that big strong down morning on Tuesday in gold. And again, what happened after that? Well, we saw gold continue to move down and then sort of bottom out. And what we've seen since last Tuesday the 15th is we have seen gold sort of bounce along the 122 mark, 122.20, something like that. And of course, it started to spring up off that, even though it was a down day. Remember, our Heikin-Ashi candlesticks help us follow the average pace movement. Price still hasn't pushed through the 2-day trend line, well below the weekly, but again, very concerned about the price percent oscillator crossing over, going up at the same time the derivative oscillator did. Watch the charts in the morning if you are in this down move as a practice trade. If it does keep going up, then do be very cognizant of what's going on with this 4-hour chart, because it really has started to work again over the last few weeks. It's nice to see it starting to work again, but you don't want to get stung by it. Folks, that's where we are as we end the day on Tuesday, as we go into Wednesday, the 23rd. Again, if you haven't purchased our book, we hope you will do so. If you have questions, problems, concerns, write us. We love to hear from you. cw@chartingwealth.com. We also heard you when you responded to our poll that we conducted over the weekend with our comprehensive review and forecast about would you like some short chart training and tips for shorter time period trading. And we heard that. We're working on that. We've come up with the name of our short chart trader project, and we are going to get that going in short order. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.